Hey guys, and welcome to a special episode of Soldera Markets. Today we're recording a state of the go markets. It's an outlook for 2025, Q1 specifically. So this will be a little bit of an overview, what we think is going to happen, what we think are the most exciting developments and trends that deserve to be looked out for. And yeah, we think it's going to be good. So, here with Al, well, why don't we dive straight in? What are you most excited for this year?
So most excited, especially in Q1, I am about the upcoming reporting requirements. So we'll talk about CSRD later in the episode. But before that, I also want to talk about the overarching topic of supply and demand, because obviously, as a free market mechanism, it's very important to understand how both of these things work out because that has a significant impact on the price. When it comes to supply, in terms of the international guarantees of origin market, or well, within the European market, the biggest exporter is Norway. In terms of demand, biggest importer is Germany. So what happens in both of those places is extremely important for the entirety of the market. And right now, we're kind of in the state where last year we saw, in addition to the year before that already being very strong in terms of hydroelectricity production, that has continued over into 2024. And now we're kind of sitting in a state where the guarantees of origin market is somewhat oversupplied. And in Norway, the reservoir levels, which is essentially stored up energy that they could use to create even more, at all time, that is at relatively high, unusually high levels right now. So we're sitting in a situation where the market has a lot of supply available. There's an expectation that supply is going to come online. And that's really depressed the prices. But what I'm really excited about in Q1 specifically is the fact that thanks to European regulations, we are expecting to see more corporations start reporting on their renewable energy consumption, specifically larger ones, because there's new regulation that says, hey, if you have over 500 employees and you're a European company, similar to how you get your finances audited once a year, you need to get your sustainability report audited once a year. So you don't have to do anything specifically. We're not making you do anything, but you do have to disclose what's happening. This is something called the Corporate Sustainability Reporting Directive, or the CSRD. So our expectation is that we're going to see some sort of impact for that. And we're hoping that's going to balance out the relative oversupply in the market. Now, this other thing that's worth mentioning is that while some people in the market feel that the market is somehow even more oversupplied than it was in 2024, based on the analysis we've seen so far, that does not feel like it is the case. We are likely sitting at lower levels of oversupply than we were at the start of 2024, which is somewhat positive, especially considering the fact that we're expecting more demand to come online this year.
A question about the capacity of Norwegian reservoirs and oversupply in general. Is it kind of predictable when that supply is going to hit the market, being a sort of stored energy source, so to speak? Or is it possible that, those reservoirs won't be released in like a fashion that will completely flood the market with geos, or is it almost a guaranteed?
It's complicated. So what you have to keep in mind is that when you're producing electricity, you're not necessarily doing it for the geos, and that's not the thing that's actually informing your decision. Generally, what ends up informing your decision is electricity supply and demand on the physical grid. And that essentially means that if the energy prices go too high, you are just more likely to capture that opportunity and sell into the market, because that's the market is essentially telling you, hey, there's not enough electricity on the grid right now, right? So if electricity prices are high, then you would expect more renewable energy to get created, especially in this way, which does lead to more supply in the market. In terms of predicting that, sadly, I don't have that kind of crystal ball. It might be an exceptionally wet year. I feel like it's going to be, but if it is, those reservoir levels are likely to stay where they are. If it's an exceptionally dry year, we might even end up with the reservoir levels significantly lower than we saw last year. So it's all ultimately going to come down to how the market behaves, what is the electricity market doing, and especially what is the general water cycle looking like, especially when it comes to Norway.
So many factors to include. Have you sort of thought about electricity markets more broadly when conducting a Q1 sort of outlook, or do you specifically sort of limit it to sort of policy demand and stuff like maybe upcoming auctions and stuff like that as well?
When we're analyzing the markets in Soldera and trying to get a good outlook on what we expect to happen currently, we do not include a lot of context outside of the guarantees of origin market itself. Mostly because eventually you get to a point where you're modeling the entire economy and how it behaves. And is that like a reasonable endpoint you want to end up in? And is that going to inform your decisions better or worse? In my opinion, keeping it simple gives you 80% of the insight that you're going to have. And we do have to keep in mind that a lot of the inputs, in some sense, are random. They aren't deterministic. So there is this distribution of things that could happen over the next months, over the next year. Getting too caught up in the details probably isn't that helpful for getting to reasonable results.
So in the short term, the two biggest supply conditions you see are hydro reserves and upcoming auctions. Is that correct?
Yeah. So auctions are a good indicator of how the market's behaving. Well, at Soldera, we do quite a lot of selling ourselves, but there are also these big public government auctions. There's one coming up again in France soon, and these are very helpful price indicators because it kind of gets you a very specific snapshot in a point in time of, yeah, the market's behaving this way. We do expect more supply to come into government auctions this year than last year. That's just this kind of natural process. That doesn't necessarily mean anything bad or good. It's just a fantastic source of information.
And we're already seeing sort of auctions happening of late 2024 volumes, correct? Does that give any sort of insight into how the market's developing, or is it just sort of, the final remnants of last year's market?
In my head, I've written off like the ability of 2024 markets getting significantly better than they are right now, I'll be completely honest. Mostly because 2024 was quite oversupplied, the prices are pretty low, and there is more supply expected to come onto the market exactly through these auctions. So my personal expectation is that we're going to see these price levels of like 20 cents up to maybe 30 cents per megawatt hour. But that's about the range we're going to continue seeing. I don't have a lot of optimism that's going to change. I think what we should focus on at this point is the 2025 market, how that's going to play out. And very importantly, are we going to end up at the end of this quarter in a situation where the oversupply has gotten worse as a situation, or has it somewhat resolved? And there is a reason to expect that we can make pretty good informed deductions based on what's going to be happening in the next couple of months, mostly because of this thing called the disclosure deadline. Disclosure deadlines are essentially, hey, you have this 2024 energy consumption, and what is the specific date we're going to say, hey, you need to stop, like you can't buy geos on the market and use it for your 2024 energy consumption anymore, right? So we have to have this lock-in moment of, that's the state, we're moving on to the next year, we're going to think about the next year. And where that need comes in to actually lock this in is something called the residual energy mix. And what that is on a country by country level, essentially a description of, hey, if you aren't using guarantees of origin, if you aren't making any specific claims about the source of your electricity, this is what you got from the grid. This is the carbon footprint. These are the emissions. These are the sources of all of the electricity on the grid that you consumed that year, assuming you didn't make any claims about it, right? So it's essentially the leftovers of anything that didn't get used, anything that didn't go into a specific claim. And we need to lock that in at some point, because otherwise this can keep shifting. It can keep changing even later into the year. And that gets really complicated to even think about what does that mean for a company's or a country's emissions intensity. What can we say about it? Because if we keep revising it for multiple years in a row, it becomes quite chaotic.
So as companies look to secure their geo positions in the run up to the disclosure deadline, that's when you expect the biggest sort of buy volumes to be occurring.
Historically, quarter one is quite a trading intensive period of time, mostly because we are trying to get rid of the previous year's guarantees of origin. We're trying to find a buyer for all of the supply. Buyers have a sort of deadline because after that, they can't make any claims about for renewable energy anymore when it comes to last year. And that all comes together into being this last sprint before the market essentially locks in. And why that is really important, especially this year, the disclosure deadline is the 30th of March. So it's essentially the end of the quarter. And what happens next quarter is the first audited sustainability reports for the year 2024 have to be published by all of these large companies. The corporate sustainability reporting directive is going to come into force in the sense of, hey, now you actually have to put out the documents. Companies that have over 500 employees are going to have to think about the question of renewable energy use this quarter, so they could actually be reporting it next quarter.
So how much of a difference are these incoming CSRD requirements in comparison to sort of existing regulations? Are we talking like complete overhaul here, or just sort of like a basic amendment pushing people in the direction of goes? Or, let's get into the actual nitty-gritty of it.
What you have to understand about the CSRD is it doesn't prescribe, it doesn't make you do anything. It just makes you be very public and audited and verifiably accountable for your emissions, for how you are having an impact as a company on the environment. And it doesn't actually ask you to do anything, right? It just asks you to report on the activities that you're doing. So what that means is if you are a company and you want to have that halo effect, you don't want to potentially endanger your company by looking like you just don't care at all. You have to do a couple of things to achieve that. And part of this is, hey, where does your electricity come from? Because if it's all coal, that's going to have a major impact on you if you are in any way energy intensive industry.
Do you think that big, companies over 500 employees, optics are a big focus, but does that apply to everybody, or there's some people who literally won't care? Or, I mean, what sort of distribution of companies in the European Union do you think actually not controlled by, but inspired to do the right thing and make sure that they have good optics in this scenario?
I think that's a really hard call to make right now. And I think this year is going to be very informative for us because we're actually going to end up with a somewhat definitive answer to that, right? That's very exciting because historically we don't really have this kind of cohesive, standardized way of thinking about things or reporting about these things. So this year is really going to be the first time we actually get good insight into that. I am hesitant to make a call before that. But what the CSRD did definitely achieve is that it started this conversation in corporations. Because if they have to do this, they have to talk about it. They have to ask the corporation, hey, what are our priorities? What are we thinking about here? Because we're going to have to say that we're doing something or nothing, but it's important that we have an answer for that.
Given that all of these things are kind of on the horizon, and we're talking about 2025 being a year that really illuminates this space, I'm particularly interested in how forwards have responded to this, right? I mean, what is the market sort of signaling in terms of how important CSRD is going to be for the geo market?
So one of the things that we definitely have seen more and more across the last year is that there's been this larger interest in locking in guarantees of origin prices into the future. So having some sort of certainty that this is the price we're going to have to pay in 26, 27, that's significantly increased. I think we especially saw that in the end of last quarter. Saw this drastic increase in trading activity, mostly because of the depressed prices, right? But we also saw, I think it was around 70% of the market's entire volume was traded on a forward basis. So looking into 25, looking into 26, looking into 27. So a lot of that got already locked in ahead of time. And now we're still observing that there's increased demand and interest in getting certainty on future prices. I think part of this is many buyers see the current state of the market as being relatively anomalous in terms of the current guarantees of origin spot market being quite low, while the expectation has been that the prices get better and better. But as there's been this sort of knee-jerk reaction, I think we're also seeing the forward curve slightly come down. And I think this does signal that there's still a lot of way to go in terms of locking in that demand and getting those prices fixed for an even larger amount of people or organizations.
It's interesting that you mentioned sort of organizations towards the end there, because CSRD is going to be rolled out in like a tiered way, right? As it looks here from 2026, it's going to be even sort of larger criteria of companies that are required. So going from 500 employees down to 250. You saying that the futures market isn't quite as excited about that as it, it sounds great, but we're still too unsure at this stage.
That is a way to describe it. So yeah, you're right. In terms of 2025, we're going to see companies with either 250 employees, 40 million euro net turnover, or a 20 million euro balance sheet total. Those are in 2026 going to have to report about 2025. Then there's even smaller companies getting added in upcoming 2028, we can say. So the rest is going to be on a much longer timeline. But in that specific range, we're going to see more and more companies have to join in. And I don't think we're seeing those smaller companies really thinking about that just yet.
Yeah. I mean, if you were a business owner within that sort of category, size range, would you even know where to start thinking about this stuff from a perspective of geos? If you're not already purchasing them, you're going to be approaching this market for the first time. That should bring a whole new sort of category, segment of demand, right?
In some sense, but you have to also think about how most companies approach this kind of problem, and they end up approaching it very similarly to how your I might approach this problem. So you have somebody that supplies electricity to you, and generally they offer this green electricity package, right? So green electricity packages are backed with geos. You don't really need to think about that. It's just something that's tacked onto your electricity bill, and that's it. What happens in terms of market operations in the background, that's a lot more complicated than I think most people or organizations really have to think about. But it does end up getting reported and resolved when we get into this reporting phase.
Moving on to sort of more policy, it seems like it's not just CSRD that's going to be driving demand. There's also hydrogen inclusion within RED3, correct? So
there are very different opinions on how fast hydrogen is going to pick up in the European market in general. So for context, in the Renewable Energy Directive's newest iteration, there's been this clause that, hey, if you want to have green hydrogen, here are our conditions. You have to use green electricity for it. It has to be provably sourced. It has to be relatively closely produced in time to the actual moment in time you're using all of this electricity to create pure hydrogen. That's essentially what the Renewable Energy Directive says. That's what's been confirmed in the last quarter. Are we seeing a major pickup of hydrogen production this year? I'm not completely convinced on that. I think we're in a relatively early stage market. I think that's going to play out in the next couple of years. I don't know if it's going to have necessarily a big impact this year.
yeah, I guess that's as a factor that just depends on the growth of the hydrogen market, which is itself dependent on so many different factors. But it could be an exciting catalyst if there are any big breakthroughs or developments in hydrogen next year or this year even.
Yeah, exactly. If the technology becomes a lot better, a lot more efficient, what ultimately is the promise of hydrogen is that when the electricity markets prices are very low, this can be a way to store that energy, right? So you take electricity off of the grid, you use that to produce hydrogen, and then that hydrogen later can be released back into the market in the form of electricity again, right? So it can function as a sort of battery if the markets are volatile enough, especially because of renewable energy production, where you see very low prices at some points in time, and you see very high prices because there's just no renewable energy production happening. There is this question of what happens in those dark winter nights with no wind. And well, that's essentially the time where you're going to have very high prices in a very renewable energy dependent market, right? So you need to figure out the storage, and you need to have ways to actually take advantage of the fact that you're going to know, hey, this point in time, there are going to be very high prices. How do we move electricity over to actually take advantage of that?
And another factor that you've included here is local sourcing. Do you think that's going to play a bigger role in 2025 than it has in the past? Or do you think it's still kind of a niche interest for the people who are more informed as to what makes a renewable energy claim more credible?
I think we're seeing these kind of requirements evolve over time. I think the best example of that is in Germany. Essentially, for certain subsidies, you have to use renewable energy. 80% of that renewable energy has to be sourced from like the closer locally area around Germany and including Germany. Those kind of requirements, as governments start thinking about these things, those are going to create these kind of local premiums. So, hey, to get this subsidy, no, you need to use renewable energy from Estonia, or, you need to use a renewable energy in the country that you're actually in. Can happen. We'll see. I think there's an argument to be made, especially in addition to temporal matching of, your consumption and the production should be closer in time. Those are two trends that we are seeing people be quite interested in, especially large corporations. So in Denmark, for example, we are seeing Google and Better Energy collaboration on temporal matching renewable energy over there. And specifically, this all ties into the new Renewable Energy Directive additions, which also require or ask governments to start looking into what do hourly geos look like on this kind of higher resolution data of it was produced here and consumed here in a relatively close time period. But yeah, experiments are happening in terms of hourly matching. There are some emerging requirements in terms of closer matching the actual area the energy is being consumed in. And these are all developments that I don't expect to have a major impact on 2025, but it is going to be something on the radar of we're going to see how this evolves and moves into 26 and 27.
So with RED 3, there's also a sort of push towards making it easier for domestic renewable installations, such as rooftop solar. Again, I guess that depends on how large that market continues to be. Do you see that significantly impacting geos?
I actually don't have a good feeling on how that's specifically going to impact the geo market as a whole, but I definitely do see how that's going to affect Soldera specifically, or our ability to enroll customers. Because one of the things that we've seen in a couple of countries is that they make it extremely hard for rooftop solar type of producers to actually benefit from the system. In Estonia, we're very blessed to have pretty good systems around this that make it very streamlined for small producers. But I have seen in a couple of countries, for example, Finland, where while it is physically possible to enroll yourself into getting guarantees of origin, it is possible, but it does require a couple €100 audit to actually achieve. And when you just start putting those things together, it stops making sense, right? So there's this unreasonable barrier to entry compared to any benefit you're expecting to get from it. And that's what you see in RED 3 in terms of phrasing. They're essentially saying, hey, if you're under 50 kilowatts and you're a producer of renewable energy, it should be possible for you to benefit from these kind of systems in a more simplified, streamlined manner. And we're going to see regulations get updated in various countries to actually achieve this. So that is something at Soldera that we're really excited about happening in the upcoming months. And hopefully by the end of the year, we will have multiple countries that have actually changed their policies, especially when it comes to smaller producers.
So I guess onboarding smaller producers is going to be a sort of a fresh priority for 2025. Do you think, I mean, this is a kind of a loaded question. Does Soldera have enough sort of momentum and capacity to change the domestic geo supply, on the European scene? Probably not within 2025. I'll give you that. But, in the long term, what do you think?
Well, in Estonia, where we launched at the start of last year, I think you can see our contribution actually to the supply charts when they come out this year. And that does end up being our ability to enroll various sizes of renewable energy producers into getting guarantees of origin. We go the extra mile to make sure that it's as simple for you as possible, that it's streamlined, that you don't have to do much. We want to take the paperwork out of the question. We want to make it relatively minimal effort for you, so you could get everything done in under an hour, and then you can just step away and everything's fine. I think there is a major need for this, and the smaller and smaller you get, the more real the need is, because otherwise you just won't participate. I do think we have already had an impact in the countries that we're operating, and I think as we expand, we're going to see this impact magnify.
I'm curious now about sort of national programs within various European countries, besides those that are enhancing access to renewables for the domestic market. Is there anything that's sort of looking at the more energy intensive industries, either in assistance or a firmer push towards renewable production?
There are a couple of examples of this on the market. Italy has been looking at this quite specifically. They released this policy that essentially says, hey, if you're a really energy intensive industry, we're actually going to subsidize your electricity, but that's going to require you to start building or repowering renewable energy plants or contribute in other ways into solving this question of how do energy intensive industries actually get the electricity that they need. I find that to be super interesting. I'm unsure how that's again going to affect the market in the short term. But in terms of how that's going to affect the market in the long term, I'm very excited to see how these national programs can affect supply and demand, and how they can make participating in this renewable energy market a lot more attractive and interesting.
Another key area that seems to be popping up a lot is the German elections, right? As Germany is the biggest importer of geos in the European market, curious what you think and how you've incorporated that into your outlook.
So it is something we had to look at, obviously, because of them being the biggest importer of guarantees of origin on the market. Their policy, very important. When it comes to the upcoming elections, under the assumption that the AfD party doesn't end up forming a coalition, which based on everything we've seen so far seems highly unlikely, the other configurations of how a government's going to end up getting formed with the CDU and SPD participating, they generally all have a very supportive perspective when it comes to renewable energy and when it comes to free market frameworks. So we're expecting the German elections to not have a major impact on the guarantees of origin market as they are right now. And there might be an upset, but even in that upset scenario of somehow the AfD coming into power, thanks to the European regulations placing already quite significant requirements on how things have to be done, we don't expect any short-term impacts from that really being that measurable. But in a long-term kind of fashion, if the AfD came into power, I think that would say a lot about where the European Union in general is headed. And I'm not quite sure I'd be a fan of the outcomes over there.
Yeah, I don't think you have to be particularly political in any direction to sort of agree that would be quite damaging for the overall sort of frameworks of the EU, and it would set a precedent, especially given recent political developments globally about renewable energy. So I'd say from a renewable perspective, it's not that we're hoping for one particular outcome for any political sense, but we're just hoping that the market retains its sort of integrity, right?
If we do end up in this world where Europe start doubling or tripling its coal usage, I think that would be a long-term problem. Definitely wouldn't be a great fan of that happening. Outside of essentially this scenario where the AfD comes into power, this won't happen, however. So there is a small likelihood that it would. Anything that we've seen so far doesn't really point in that direction.
Coal, I mean, I read the recent Ember report. They specified that solar's just overtaken, was it gross output of coal in any one particular global region, this being the EU, and wind is also trending to do the same for 2025. So I think it's good, but not if this happens, right?
Best we could do is just hang in there and just see what happens.
So I guess on that note, we've kind of looked at all of the major variables that could play a role in 2025, not giving a speculative opinion either way. Yeah, so I think that wraps up our Q1 market outlook. I guess we'll be making these a new feature, which I think is a nice thing.
Yeah, we'll keep you updated on a quarterly basis. But essentially, to summarize what we're expecting to see this quarter in particular, we are entering into the market with quite a lot of supply. We want to see that get reduced. There is quite a high likelihood of that getting reduced due to the corporate reporting requirements that we're going to see really get acted on at the start of this quarter. How that plays out in this quarter is going to be a big decider on how the rest of the year is going to play out. So something to keep in mind. How are the sustainability reports going to end up looking? What's the rain in Norway? And how do the German elections play out? I think those are the three major questions that are going to decide the general direction and vibe of this year.
Thanks for listening, everybody. And yeah, stay tuned for more geo-related content.